Stock market does not wait for the unprepared. AI is moving. Chips are weakening. Rates are pressing. Earnings are approaching. Sectors are rotating. And if you enter this battlefield without preparation, the market will teach the lesson for you. Not gently, not slowly, and not on your schedule. This is the stock's battlefield. Prepare before prediction. Review before repeat. Prepare before action. Segment 1. The field opens. Before you trade stocks, you must understand the battlefield. Stocks are not just tickers on a screen. They are businesses. They are sectors. They are earnings expectations. They are interest rate pressure. They are institutional positioning. They are liquidity. They are emotion. And when the crowd forgets that, the battlefield becomes dangerous. A stock can rise for days, weeks, even months, and still become dangerous at the wrong entry. A company can dominate headlines and still punish the trader who arrives late. An index can look strong, while leadership underneath begins to weaken. That is why the market warrior does not chase the surface. The market warrior studies the field. Right now, the stock's battlefield is being shaped by several forces at once. AI momentum, semiconductor pressure, rate uncertainty, earnings expectations, sector rotation. Each force matters, but together, they shape the terrain. The AI rally has captured attention. It has pulled capital. It has shaped headlines. It has influenced technology leadership. It has changed how traders think about growth. But attention is not preparation, momentum is not safety, and popularity is not protection. When expectations rise too high, the battlefield becomes less forgiving. A strong company can still fall. A powerful trend can still correct. A leader can still lose momentum. A crowded trade can still trap the late arrival. That is one of the first lessons of the stock's battlefield. The question is not only, is the story strong? The question is, what has already been priced in? Where is the stock now? Where is the sector now? Is leadership expanding or narrowing? Is volume confirming the move or fading beneath it? Semiconductors deserve special attention. Chips are not just another corner of the market. They are connected to artificial intelligence. They are connected to data centers. They are connected to cloud infrastructure. They are connected to hardware demand. They are connected to future growth expectations. When chips are strong, the market listens. When chips weaken, the market listens even more. Because semiconductor weakness can send a message before the broader market admits there is pressure. It can reveal fatigue. It can reveal profit-taking. It can reveal that traders are questioning whether expectations have moved too far ahead of reality. The unprepared trader sees a dip and reacts. The market warrior sees a signal and studies. There is a difference. One is impulse, the other is preparation. Rate risk also stands near the field. When rates remain elevated, stocks must carry that weight. Growth stocks feel it. Technology stocks feel it. Small caps feel it. Companies depending on future earnings feel it. The trader who ignores rates ignores gravity. The trader who ignores inflation ignores pressure. The trader who ignores the Federal Reserve walks into the battlefield without reading the weather. And no market warrior does that. Then comes earnings. Earnings are not just numbers. They are judgment. They are confirmation. They are disappointment. They are guidance. They are margin pressure. They are revenue strength. They are cost control. Earnings are the market asking one question. Did the story survive contact with reality? A stock can look calm before a report, then gap violently after the announcement. A trader can feel confident before earnings, then discover that confidence was not preparation. This is why the stock's battlefield requires respect, not fear, respect. Fear paralyzes, respect prepares. A market warrior does not avoid the battlefield because it is difficult. A market warrior studies the battlefield because it is difficult. Sector rotation is another signal. Sometimes the market does not collapse. It rotates. Money leaves one area, and enters another. Technology weakens, while financials strengthen. Semiconductors pull back, while industrials hold. Mega-cap leaders pause, while other sectors quietly advance. To the unprepared trader, this feels confusing. To the prepared market warrior, this is information. Rotation tells you where strength is moving. Rotation tells you where leadership is fading. Rotation tells you whether the rally is broadening or depending on fewer and fewer names. And when fewer names carry more weight, the battlefield becomes fragile. This is why Sun Tzu trading does not train the viewer to gamble. It does not train the viewer to chase. It does not train the viewer to hunt for signals. The mission is different. The mission is preparation. Capital preservation before profit. Education before leverage. Discipline over emotion. Preparation before prediction. You are not here to react to every headline. You are not here to follow every candle. You are not here to enter a stock because the crowd is excited. You are here to become a market warrior. And a market warrior studies before entering. Before the next move, study the index. Study the sector. Study the leadership. Study the weakness. Study the rate environment. Study the earnings calendar. Study the risk. Then ask the question that separates preparation from impulse. Is this battlefield ready for me, or am I trying to force my way into it? That question can protect capital. That question can prevent emotional trading. That question can stop the market warrior from confusing movement with opportunity. In the next segment, we enter the danger zone, the cost of entering unprepared, chasing AI momentum, ignoring chip weakness, trading earnings without a plan, oversizing because a stock feels safe, reacting to headlines instead of preparing through process. The battlefield is open, but entry is not automatic. Review before repeat. Prepare before action. The stock's battlefield has opened. Review before repeat. Prepare before action. Segment 2. The cost of entering unprepared. The stock's battlefield does not punish every mistake at once. That is what makes it dangerous. Sometimes the market gives the unprepared trader a small win first. A quick move, a lucky entry, a green candle at the right moment. And that small win can become the trap. Because the trader begins to believe that movement is mastery, that confidence is preparation, that being right once means being ready. But the battlefield is patient. It does not need to defeat the trader immediately. It only needs the trader to become careless. This is where the cost begins. The first danger is chasing. Chasing the name everyone is talking about. Chasing the stock that already moved. Chasing the AI rally after the strongest move has already been made. Chasing a green candle because the crowd says the opportunity is still alive. The unprepared trader asks, how much higher can it go? The market warrior asks, where is the risk now? That difference matters. Because a stock can continue higher and still be a poor entry. A stock can remain strong and still be too extended for a disciplined plan. A powerful company can still become dangerous when the trader arrives late and oversized. Momentum is not permission. A headline is not a plan. A popular stock is not protection. The second danger is ignoring weakness beneath the surface. An index may still look strong. The headlines may still sound confident. The market may still appear calm. But underneath, leadership can begin to narrow. Semiconductors can weaken. Volume can fade. Sector strength can rotate away. Former leaders can stop leading. The unprepared trader sees the index. The market warrior studies the structure. Because the battlefield does not always break all at once. Sometimes it cracks at the edge first. Then the pressure moves inward. That is why chip weakness matters. That is why sector rotation matters. That is why leadership matters. Not because they tell the future with certainty. They do not. They matter because they reveal pressure. They help the market warrior understand whether the ground is firm or beginning to shift. The third danger is earnings. Earnings can change the battlefield overnight. A trader may study the chart, read the headlines, believe in the company, watch the stock hold support, feel confident. Then the report arrives. Guidance changes. Margins disappoint. Revenue misses. Costs rise. Management warns. Or the numbers are strong, but not strong enough for the expectations already priced in. Then the stock gaps. And the trader learns that confidence was not preparation. Earnings do not care how much a trader likes the company. They do not care how popular the stock has become. They do not care how clean the chart looked the day before. Earnings are a battlefield event, and a battlefield event requires respect. This does not mean the market warrior fears earnings. Fear is not the doctrine. The doctrine is preparation. Know the date. Know the expected report. Know whether the stock has already run into the announcement. Know whether the position size respects the risk. Know whether the plan survives a gap. If there is no plan, there is no command. The fourth danger is oversizing. Oversizing turns a normal market movement into an emotional event. A small pullback becomes panic. A normal shakeout becomes fear. A routine loss becomes a wound. The trader who is too large cannot think clearly. The position begins to command the trader. The screen begins to control the body. The candle begins to control the breath. That is not discipline. That is captivity. A market warrior does not allow one position to take command. Capital must remain under control. Risk must remain visible. Size must respect uncertainty. Because in the stock's battlefield, even good ideas can move against you first. Even strong stocks can pull back. Even correct analysis can fail when timing is poor. The goal is not to prove courage through size. The goal is to preserve command. The fifth danger is emotional reaction. A headline appears, a stock jumps, a stock falls, a commentator speaks, a social feed explodes, the crowd becomes loud. And the unprepared trader reacts. Buy, sell, add, exit, re-enter, chase again. This is how overtrading begins. Not from strategy, from agitation. The market warrior must know the difference between information and provocation. A headline may be information, but the emotional reaction to that headline can become provocation. The battlefield will always produce noise. The question is whether the trader has a filter. That is why preparation matters before the market opens, not after emotion has already entered the body, not after the candle has already moved, not after the crowd has already shouted. Before. Before the next move, before the next entry, before the next decision. The sixth danger is confusing a watch list with preparation. A watch list is useful, but a watch list is not enough. A list of tickers does not define risk. It does not define invalidation. It does not define position size. It does not define earnings risk. It does not define the market regime. It does not tell the trader when to stand aside. The unprepared trader collects names. The market warrior builds a plan. There is a difference. A plan asks, why this stock? Why this sector? Why now? Where is the risk? What would prove the idea wrong? What event could change the field? What is the maximum acceptable loss? What will stop me from acting emotionally? Without those questions, the trader is not preparing. The trader is hoping. And hope is not a battlefield system. The seventh danger is refusing to stand aside. This may be the hardest lesson for new traders, because the market is always moving. There is always a stock running. There is always a story building. There is always someone claiming urgency. But the market warrior understands, not every movement is an opportunity. Not every opportunity is yours. Not every battlefield deserves entry. Sometimes the disciplined move is observation. Sometimes the disciplined move is patience. Sometimes the disciplined move is cash. Cash is not weakness. Cash is a position when the battlefield is unclear. The unprepared trader fears missing out. The market warrior fears entering without command. That is the difference. This is the cost of entering unprepared, chasing strength without measuring risk, ignoring weakness beneath the surface, trading earnings without respect, oversizing until emotion takes control, reacting to headlines instead of following process, confusing a watch list with a plan, refusing to stand aside when the field is unclear. Each mistake may look small, but together they form a pattern, and that pattern can drain capital, damage confidence, and train the trader to become reactive. Sun Tzu trading exists to interrupt that pattern, not with signals, not with hype, not with promises, with preparation, with discipline, with risk awareness, with capital preservation, with the war room mindset. In the next segment, the market warrior prepares. We move from danger to discipline, from reaction to process, from noise to market intelligence. The cost has been revealed. Now the preparation begins. Review before repeat. Prepare before action. Segment 3. The market warrior prepares. The cost has been revealed. Now the preparation begins. A market warrior does not enter the stock's battlefield because the market is moving. A market warrior enters only after the field has been studied. That is the difference between reaction and command. The unprepared trader asks, "What should I buy?" The market warrior asks, "What is the battlefield telling me?" That question changes everything. Because preparation does not begin with a ticker, it begins with the field. Before the next stock is considered, the market warrior studies the broad market, the major indexes, the leadership groups, the weak sectors, the strong sectors, the rate environment, the earnings calendar, the volatility conditions, the headlines that matter, and the noise that does not. This is not complicated for the sake of being complicated. This is command. The stock market is not one thing. It is many forces moving at once. Large cap technology, semiconductors, financials, energy, healthcare, industrials, consumer stocks, small caps, growth, value, defensive names, speculative names. Some areas can be advancing, while others are weakening. Some leaders can be breaking out, while other former leaders are losing command. Some stocks can be strong, but extended. Some stocks can be weak, but not yet broken. Some stocks can look attractive, but carry earnings risk directly ahead. The market warrior does not treat all movement the same. Movement is not opportunity. Movement is information. The first step is market regime. Is the broad market trending? Is it consolidating? Is it rotating? Is it weakening? Is leadership broad or narrow? A strong market with broad participation is different from a market carried by only a few names. A pullback inside a strong trend is different from the beginning of a deeper breakdown. A quiet market before earnings is different from a quiet market after risk has already passed. Context changes the meaning of price. The second step is sector leadership. Where is strength flowing? Where is capital leaving? Are semiconductors confirming technology strength? Are financials supporting the market? Are defensives rising because investors are seeking safety? Is energy responding to oil? Are small caps participating or being left behind? A market warrior does not need to predict every rotation, but the market warrior must observe rotation. Because rotation tells a story. It shows where institutions may be moving. It shows where confidence may be rising. It shows where pressure may be building. The third step is stock selection. Only after the field is understood does the market warrior study the individual name, not before. The question is not simply, do I like this company? The question is, does this stock belong to a strong battlefield? Is the sector supporting it? Is the chart confirming it? Is volume confirming it? Is the stock near earnings? Is there headline risk? Is the entry extended? Where is the invalidation level? What would prove the idea wrong? If the trader cannot answer those questions, the trader is not ready. The fourth step is risk definition. Before entry, risk must be visible. Not imagined, not guessed, not decided after the trade moves against you. Visible. Where is the line? Where is the level? Where is the point where the idea no longer deserves capital? A market warrior does not enter first and define risk later. That is not preparation. That is surrender. Risk must be defined before the battlefield is entered. The fifth step is position size. Size is not just a number. Size is emotional pressure. Too large, and the trade begins to control the trader. Too small, and the trader may treat the plan carelessly. The goal is balance. Enough size to respect the plan, not so much size that emotion takes command. The sixth step is event awareness. Earnings, Federal Reserve decisions, inflation reports, employment data, major guidance updates, sector news, geopolitical shocks, oil pressure, bond yield movement. Events can change the battlefield quickly. A market warrior does not need to know the future, but the market warrior must know what events stand ahead. That is why preparation is not optional. Preparation is the shield. And this is where the path becomes clear. Before the stocks battlefield, before options, before crypto, before Forex, before futures, before commodities, the market warrior begins with market intelligence. Market intelligence is the gate to the war room. Not a shortcut, not a signal machine, not a place to chase excitement. The gate, the place where the market warrior begins to understand the field before taking action. Market intelligence helps the viewer slow down, look across markets, recognize pressure, identify major events, respect volatility, study the conditions. Then the war room becomes the place of preparation, the command table, the review chamber, the place where impulse is challenged, the place where risk is made visible, the place where the next move is not guessed, but prepared. A market warrior does not enter the war room to find permission to gamble. A market warrior enters the war room to test discipline. To ask, is the market clear? Is my plan clear? Is my risk clear? Is my emotion under control? Is this trade necessary, or am I forcing action? That question may be the difference between preservation and damage. Because the strongest market warrior is not the one who trades the most. The strongest market warrior is the one who knows when to act and when to stand down. Preparation also includes study. No market warrior develops alone. Every serious student must decide what to study, who to learn from, and how to compare ideas with discipline. That is why Sun Tzu Trading uses the War Council framework. The War Council is an independent editorial reference system. It helps viewers identify public educators, thinkers, professionals, and market voices who may be worth further independent study. It is not a ranking. It is not an endorsement. It is not an affiliation. It is not sponsorship. It is not a performance claim. It is not a recommendation to buy any product or service. It is independent editorial recognition for further study. For the stocks battlefield, viewers interested in stock trading education may study the public work of Oliver L. Velez. Oliver L. Velez is included here as a relevant War Council study reference for stock trading education. Again, this is not an endorsement. It is not an affiliation. It is not sponsorship. It is not a performance claim. It is not a recommendation to purchase anything. It is a neutral educational reference for viewers who want to continue independent study in the stocks battlefield. The market warrior studies widely, but the market warrior does not surrender judgment. Every lesson must be tested against risk. Every method must be compared against discipline. Every teacher must be studied with independent thought. Every idea must be filtered through capital preservation. That is the doctrine. Now bring the battlefield into a checklist. Before trading stocks, ask these questions. What is the broad market doing? Are the major indexes strong, weak, or mixed? Is leadership broad or narrow? Are AI and semiconductor names confirming strength or warning of pressure? Which sectors are leading? Which sectors are breaking down? Are rates rising, falling, or creating uncertainty? Is the dollar adding pressure? Is oil affecting inflation expectations or sector rotation? Is this stock near earnings? Has the stock already made a major move? Is volume confirming the move or fading beneath it? Where is the invalidation level? What would prove the idea wrong? What is the maximum acceptable risk? Is the position size under control? Am I reacting to a headline or following a plan? Am I entering because the field is clear or because I fear missing out? What will make me stand aside? Have I begun with market intelligence? Have I entered the war room before my next move? These questions do not guarantee success. Nothing in the battlefield does. But they change the trader. They slow the impulse. They reveal the risk. They separate preparation from prediction. And that is the beginning of discipline. You are not here to gamble. You are not here to chase. You are not here to prove courage through risk. You are here to study. You are here to prepare. You are here to protect capital. You are here to build discipline. You are learning to become a Sun Tzu trader, a market warrior in training. Before you enter the stock's battlefield, study the field. Respect the pressure. Watch the leadership. Measure the risk. Know the events. Prepare your plan. Protect your capital. Begin with market intelligence. Enter the war room. Then decide whether the next move deserves action or whether the strongest move is patience. The battlefield will still be there. The market will still move. The crowd will still shout. Headlines will still come. Candles will still flash. But the market warrior does not move because the crowd moves. The market warrior moves only when preparation gives command. Study the battlefield. Prepare before prediction. Capital preservation before profit. Education before leverage. Discipline over emotion. Enter the war room before your next move. Visit suntzutrading.com. This is Sun Tzu Trading. The stock's battlefield has been opened. Review before repeat. Prepare before action. suntzutrading.com. Preparation before prediction. Enter the war room before your next move.